A look at commodities for the week starting August the 11th. We'll start with gold. Bit of a mixed bag, you can see from this daily chart here. Haven't really gone anywhere since March, at least. Or after that nice big 2.5 month bull run from the beginning of January. But since then, yeah, pretty much sideways on the grand scale of things. Uh, Going forward, well, because it's mixed, it's difficult to tell. We've got no trend to base anything on, but positive at the moment. We really nicely held this 200-day moving average, the pink line here, at the beginning of the month, the end of July, beginning of August. We burst through the 100-day moving average. So you can see we've got to get through the 1320 area now to push higher. Maybe we can test this upper trend line here at around the 1330 area. Below 1295 would be more negative. Obviously, a break below the July-August lows would trigger some selling, I would imagine, at least down to this trend line here, around the low 1280 area. Sorry, around the mid 1260 area, 1267, 1266. But the shorter-term levels, trading levels for today, are on your report, so you can refer to those. WTI crude is quite tricky. We have been going down now for over 6 weeks. This is the September chart only. Normally I look at the continuation chart, but I do always keep an eye on the months, the chart for the individual months as well. And this Sep chart shows that we are holding above the pink line here. So at the moment it looks quite positive. Thursday's candle was fairly positive. We got a bounce back yesterday. We got a bounce back on Friday as we had hoped. We are quite oversold. It's not the clearest picture, but I favour a move higher. Potential inverse head and shoulders here. Look on this shorter term chart. So if we can hold above the 9700 area at the beginning of this week, we could see this inverse head and shoulders pattern, and then a break above the neckline. I'll put the neckline in here just so you can see it more clearly. That would be quite positive and would signal that we have bottomed and we can stage a recovery. And we'll have some targets on the daily reports, of course. Last week's low 96.55. If we do get down as far as there, potential double bottom, considering how oversold we are. But obviously you break that, and it will be in trouble. Brent crude, again, I'm looking not at the continuation chart, I'm just looking at the September chart. You can see we've got some trend line resistance here, tying in fairly closely with the pink line, the 200-day moving average. We spiked up to there on Friday, but we did pull back. It's difficult, this one. We're in a bear trend, so I guess you've got to stick to the bear trend and sell resistances. That would have worked on Friday, of course, and it's only if we get above Friday's high this week that we can start looking a bit more positive and at least target the 100-day moving average. And then these late July highs up here. Obvious support is the August lows, and if we break below there, well, that's going to confirm the continuation of this 6-7 week downtrend. Gas bottomed out at the end of July, beginning of August, where we hoped it would, above important 200-week moving average support, and that really did hold nicely. It took an awfully long time to get the recovery, and unfortunately that recovery now looks like it's probably run out of steam. The candle on Thursday, not very positive, although we did manage a good recovery on Friday, which I must admit I didn't really expect. I thought Thursday's candle signalled the end of that bounce. If we can get through 4,000, well, yeah, that would open the door to some gains. Levels are on your daily report, of course. Failure to get through 4,000, which I think is more likely, will keep this market in a bear trend. The bear trend started with this double top pattern here, end of April, middle of June. And so if we can't get through 4,000, as I say, perhaps we'll be back down testing that 200-day moving average. We'll see. Levels are on your reports. Thank you.